lots of new things to discuss. We even have a dedicated article to this one, where you can see all of the features that we recently added. And it's not just about the trading down that you've been all guys expecting and asking many times. So finally you have it, trading down. So we will discuss today the trading down and what are the use cases for the trading down, what are the optimal scenarios to stick with the trading down, and in what cases it makes no sense to use the trading down. So that's something that we will discuss. Also, we will go through some minor changes as of the analytics and everything that can help you to further digest the data that we give you based on your trading activity, so that later you could use this data to analyze your overall performance and see what are the mistakes, what are the patterns that lead you to these kind of mistakes, so that you could find them out and get rid of them. So everything is analytics, and we got some minor changes there to improve the quality. So yeah, some other things like the fee zone, graphical changes, and some bugs that we also fixed. So here's the full list, as you can see. So yeah, that's actually this kind of transparency that you can expect from the Bitsgap team, that we are not afraid to post this long thread where you can see all of the issues we had before and now they are all fixed. All right, so once again, transparency is everything for us, and we want you to know about everything of what is going on Bitsgap, like what are the current developments and what are we aiming for and what we are fixing. So everything is fully transparent in that sense. So yeah, and let's see if we are all ready to go. Yeah, well, pretty much 3 minutes since we started, and I think all have joined the room already. So we will now continue. So let's go to the Bitsgap main page. And here I have my bots active. And you can see that some bots have been active for quite a long time already, like 2 months or something. So for those of you who watched previous webcasts back then, you remember the time when I entered the market with these setups. And it was then the price of Bitcoin was falling drastically from like 50k down to 30k. So I set this grid in this range, you see, perfectly predicting the bottom right here. And due to this perfect trading range that I set for this board, I was able to capture all of these market swings on this sideways market formation. Okay. So that's like one use case when you can use automated bots if you are a newcomer and you never traded bots. So that's pretty much the first use case. If you feel like there's going to be a sideways market, and most importantly you want to catch this dip, then using automated bots is one way to go to use your money, because on this dip not only you buy the dip, and in that sense you basically average your entry to the market, all right, but also on the sideways market, as the market swings higher and then again lower, you basically let the bot to buy low and sell high all the time. And it's been like that for the last 3 months, and you see the strategy paid off. Like, it's 58% in bot profit for 2 months. That's like that kind of performance that I actually expect my bots to do. And some made lower returns, like the 0x for example, but that's because like the most interest was in the Bitcoin, Ethereum and some other coins, and that's why there was not that much volatility on 0x. So this might be the reason why we only have 34% here. But another thing can be that I use different strategies. Like here I use 10 grids, but for the 0x I used 16 grids, okay? So the grid step really matters, because sometimes a wider grid step can be beneficial, but sometimes a narrow grid step can be also better. But that depends on the volatility, market timing, and the money you put in the trade actually. So this is what we got as of today. Now let's see, for example, quantum. Okay, so here's the thing about quantum. My trading range was set from the range from $7 up to $14. So this, I cannot say that it was a perfect trading range that I set, because as you can see, eventually the price fell to the point where you can see the previous support. Okay, so actually I should have set my trading range a bit lower, and that way I would be able to capture all of this price movement over here. Okay, but the thing about it is that okay, you don't need to be perfect when it comes to defining your trading range, because now you have the trailing down, and with the trailing down, even if your lower low, which is here, it's $7 for my trading range, you see, even if it's not the bottom, then with the trading down enabled, if I had it back at that time, it would allow me to capture all of this market fall over here. So my bot would actually trade here thanks to the trading down. Okay, so that's the use case for the trading down. That's like the scenario that you would expect to see, so that your trading down would be useful. And so here it is. When you expect the price to fall down to your like trading range, so lowest grid in your trading range, and you keep in mind that there is still a chance that it might fall even further down. So in order for you to capture this minor possibility that you have in your mind that it will fall further way down, you have the trading down, and you would have captured this downfall down to this $4 support over here. Okay, so that way you would let the bot to make you some money on this period here. Okay, so that's why trading down is useful in this kind of scenarios. Then you feel like you are like, let's say 70% sure that the lowest grid you set in your trading range is going to be the bottom, but the rest 30% is like the minor chance that you keep in mind that it might still fall further way down. So in order to capture this 30% of chance falling further down, you can use the trading down. So if I would have used it, well, if we had it back then I would be able to capture this minor swing even further way down. But that, you see, was not the case back then. So unfortunately, that's what we see here. These kind of a blind spots. So where the bot wasn't able to trade because it just has no, it had no any orders here in this range. Okay. So that's the thing about the trading down, is that it actually solves this issue of when your bot breaches the bottom line and is no longer active, stagnant, because it has no orders to execute below it. With the trading down, it would have set your orders lower so that the bot could continue trading for you. And trading down, the way you set it is like the lowest price down to which you feel like you can tolerate this downfall. So let's say Let's use actually the real example with whatever Badger USD. I have no idea what this coin is all about, but let's use it as an example. And let's set 20 grids, wherever. So let's say I think that the price from the the price from the current level will fall down to this lower price that I set in the trading range. But I feel like there is still a chance, like a room, for the price to fall even further way down. Let's say down to this point where we have the lower low, like the support in this case. So for that reason, I might consider trading down, and I would put it down exactly like down to the point where I see this support line, let's say over here. So that means that I give extra space for my trading range. Basically, I give extra space for my bot to capture all of this price movement if it happens. Okay, so it's kind of an additional tool for you to provide more space for the bot in case if the price goes beyond the horizon. Okay, but what you don't want to see is this kind of scenario. Let's use trading view. Here on the trading view we have a wider chart. For some reason it's not loading. Does Bitsgap support KuCoin? That's the question. Well, yes, it supports KuCoin, but let me check if nothing changed since last time I checked this. Yeah, you see, KuCoin, you can add it. Just click on it here, API and all of that, and you're ready to go. As simple as that. So why trading? I mean, these kind of things happen all the time when we have webcasts. Like the biggest website for chart analysis is not working now for some reason when I need it the most. That's like the shittiest thing you can expect from the webcast when it fails to open. Okay, whatever, but we still have charts here on Bitsgap. Hopefully, for some reason, give me the, yes, thanks for finally giving me the chart. So let's say I'm gonna do like this, and I also, okay, whatever. So let's say the price been moving like this, and you set your trading range. Let's make it green light. Let's make it wider. And you set your trading range here. So that's your upper price. Let's call it up. And that's your lower price, LP. So you expect the price to continue moving in this range so that the bot will execute trades for you. But what happens is that the price breaches the bottom line over here and falls. So the worst case scenario, if you had your trailing down enabled, the worst scenario is when the price heavily, like drastically falls without even making this minor movements upward. So no room for the bot to actually capitalize on small movements upwards. So the price literally moves like this, straight to hell. So that's the worst case scenario if you have the trading down enabled, because there is no room for the bot to get rid of all of the base currency that it purchased when your trading range was over here. Okay, so the way it works is that when the price goes below the trading range, that means that we are now fully in the base currency, because it has purchased all of, I mean, it executed all of these buy orders that we had in this initial trading range. We went below the lower price, so that means that we are now fully in base currency. So let's say we invested $1,000, so this $1,000 is now fully in the base currency, let's say in Bitcoin or wherever. So now the time plays against us. So with the trading down enabled, we expect the price to at least make some minor movements upwards, so that the bot would eventually execute the sell orders that have been following the downfall. But in like the worst case scenario is if the price falls like that, straight to hell, so no room for it to execute, and that means that your value, let's say okay, so the investment change is gonna diminish. I mean, it's gonna push your overall portfolio value down. Okay, huge pressure. That's the worst case scenario for the trading down. The medium case scenario is then, let's say we've been trading here. Okay, all good. The bot buys low and then sells higher, again buys low. This is how it works, okay, and how it worked all the time. But let's say the price falls, breaches, makes this kind of movement and makes this minor swing upwards, then again falls and makes this minor swing upwards. So at least there was some room for the bot to execute at least some of the sell orders, so that we could get rid of the base currency exposure that we had accumulated in the initial price range. Okay, so that's like the medium case scenario. Then at least there was some room for the bot to get rid of around 20%, hopefully, of the overall exposure that we had to the base currency. But the best case scenario for the trading down in that case is then, actually the best case scenario is exactly what we have on Quantum right now. If you look at the chart, see, that would be the best case scenario, because the price did fall below the trading range, okay, but eventually it was a minor move downwards. Eventually the price came back again and then fell again and then made an upward movement again. So this is like the best case scenario for the trading down, because it would capitalize on this downfall. Okay, so it would fall to this point. As we now have the trading down enabled, your sell orders would be now lower. Let's make it red. So eventually the bot would be able to execute these sell orders. Okay, so that's for us a way to get rid of some base currency on the downfall, which is good from the risk management perspective. And it made it this way up to here, and then again it fell. But on this fall we had right after this one we had first phase, that's the second phase. In this fall it would have now accumulated the base currency, so it now would be buy orders here, and then again it would sell. So if it continues this kind of pattern further, okay, like this, then we would have third phase, fourth phase, and fifth phase, and it would basically make money here, thanks to the trading down. Okay, so this is how you use the trading down. Like, if you feel like the price is gonna fall down to the point where you set your lowest grid in your trading range, let's say with the 70% of the accuracy, you feel like it's gonna reach this bottom, but you leave some room, like 30% of your overall prediction analysis, you feel like it still might fall further down, but a bit, and eventually will turn back. So this is what we had in Quantum. So if you expect this kind of scenario that we see on Quantum, that's the room for you to use the trading down. because this is like the best way for trading down to be executed, because it would allow you to make money on this area, which is not within the trading range we initially set. Okay, so once again, worst case scenario, when the price drastically, like heavily falls like this, no room for it to swing upwards. So that's the worst case scenario, because that way you're still in the base currency and there is no room for you to get rid at least of some 20-30%. No room. It gives you no chances. That's the worst case scenario. The medium case scenario is when the price moves like this in the trading range and then it falls, but at least makes some minor movements upwards. So that way you kind of get rid of some exposure you had, which is good. This is pretty much acts as a split stop loss in that sense. Okay, so consider trading down not just as an opportunity to capture some price movement below your trading range, but consider it as a kind of a postponed stop loss, which is split into several orders, because that's why it is trading down, because it's gonna move all of your sell orders down. Okay, so let's say let's say the price been trading here, boom boom boom, reached the bottom. So at that point, when it reaches the bottom, you would see only red lines, sell orders. Okay, if the price then falls, and if we have trading down enabled, then thanks to the trading down, it would move our sell orders lower. And now you have this perfect question. Well, at least I expect you to ask me this question. But what about the profit? Since we move now our sell orders lower, that means that there is no longer this, well, most likely we just diminish the marginal profit, because the idea of the bot is to buy low and then sell high. But this story changes when we start moving our sell orders lower, because at some point you will see your sell orders below the buy orders that you had for them. So that way you kind of capitalizing on the loss. But at least this now acts as a way for you to get out of the market at the best price possible, because it basically averages your exit from the market, which is good in that sense. So trading down, in my opinion, is more like a risk management tool. You can consider it as a split stop loss, as a stop loss having several orders. Like it exits the market proportionately, and that way it achieves the best exit from the market when it is falling. So that's the way for you to consider the trading down. Okay, it's just that you might be still confused about the mechanism of the trading down, because you need to really draw this picture in your head of how the bot acts and how it moves the sell orders. Okay, so it's kind of a simple logic, but since there are a few things to keep in mind, and if you haven't traded that a lot of time as I traded on Bitsgap, then you might get confused here. But we covered 3 case scenarios for the trading down, like the worst case scenario, the medium case scenario, and the best case scenario, which is the one we see on Quantum right now. And You just need to understand that even though the trading down pushes, it pushes your sell orders lower, and that way it diminishes the marginal profit you can get. If the price is gonna stay below the trading range in a prolonged time, this is when trading down is gonna be beneficial, because these returns it would have made here would eventually offset the marginal loss that you had as a result of bot pushing your initial sell orders lower. Okay, so that's the effect. I do understand that it might be confusing it and hard, but like I'm telling you that it's just that you need to trade with the trailing down to really understand by 100% how it works. Okay, so you would on your own figure out that yes, there are actually only 3 case scenarios for the trading down. The worst one when the price falls drastically, and that way, well, you are still exposed to the base currency and no room for you to get rid of it. The medium case scenario when the price falls, but at least sometimes swings higher, so that now you can at least get rid of some base currency, yeah, which is better than having nothing at all. Okay, so you were unlucky, let's say, to enter the market here and the price eventually falls. At least thanks to the trading down, it starts gradually to sell your base currency. Okay, because it trails down your sell orders. Basically, it trails down your base currency that you wanted to sell initially here, but now due to trading and the price falling, you end up selling it lower. But at least you sold it at some point before the price falls even further way down. Okay, so that's, once again, trading down is a risk management tool, and I recommend you using it because it can save you money. Because trading is not just about being right about the price prediction, but 80% of your success depends on the way you conduct a risk management. So before the trading down release, we had this stop loss, which is pretty much the best risk management tool you can have. Another risk management you apply is diversification. So you never put all the money in one strategy. You diversify it by several strategies. Even if your strategy doesn't go as you planned, like the price starts to fall and you anticipated that the price will go higher, you start losing money, well, at least you know that you did not put all your money in this strategy. So you will lose only a portion of your money, plus thanks to the stop loss, it will minimize even that loss. Okay, so it minimizes the minimum that you would have lost in any case. Now with the trading down, basically you provide more room for the bot to get rid of your base currency on the downfall, which is even better. And in basically in the combination with the stop loss, trailing down, and the way you diversify your money, that's like the ultimate risk management you can achieve in crypto space. I haven't seen any other platforms where you would have this kind of combination of risk management, the ultimate combination that literally saves you a lot of money. Okay, so that's the thing about the trading down. Let's now see your questions. So is it the best idea to create a bot with trading up and down? Well, yes, because listen, trailing down is a risk management tool, whereas trading up is more like a profit maximization tool. Because when you use the trading up, you just let the bot to follow the rally endlessly. And with the trading down, it's a bit more trickier, because with the trading down, you are exposed to the risk of not selling your base currency. Okay, so that's why trading down can work with the trading up, because these are completely different scenarios. So actually they can work together. Like the price goes higher, it gets stuck here, then the price falls, and then the trading down starts to work for you. It's like you staying in the market all the time. All right, it's just that you need to distinguish what stands for the trading up and what stands for the trading down, and that's the way for you to trade it. And of course, answering to your question, you can use both simultaneously. They do not they do not ruin the logic of the bot. They do not contradict to one another. They can work simultaneously. So when I can see the question from the Peter, when it is trading down, are we selling the upper buys to compensate the purchases back down? Yes, exactly. So okay, so maybe I have some cases where I have just red. No, I don't have red. I had some greens and I had some red lines, but anyway, the way it works is, yes, so at some point it reaches the bottom line of your trading range, so that means that you would see only red lines, so only sell orders. So now 100% you are in the market. And the way trading down works is, yes, exactly, it pretty much tries to sell what we bought here in this trading range to get out of the market by selling the base currency, and to use this proceeds to buy lower when the price makes again higher movement and falls again. This is when it's gonna buy over here. So this is how it works. Okay. But yeah, that's kind of the explanation. You can have that selling the upper buys, we basically compensate the purchases back lower. Yeah, that's the thing about the trading down, pretty much. Let me check some other questions you had. So yeah, that's I think I've spent too much time on trading down, right? Let's see what else we got. So some other minor changes, of course. You can now see. Let's select the one I'm not trading in. Let's select Algo BNB maybe. And let's see if it's gonna show us what I wanted to show you. Let's use 10. No exchange fee. Where was it? Futures trading fee zone. Yeah, so now on the chart you can see these gray lines. So they represent fee zones. And it kind of shows you that no orders can be placed there, because otherwise the fee you pay would surpass the potential profit. I cannot say if this flips the story completely, as you now have this data on a chart, because no way we would afford you to trade if you trade in minus. Like, you pay more in fees than you get the money. Okay, so no way we would afford you to do this. But it's just that now, since we want to be fully transparent, and some been asking why we had this grid step and what about the fee percentage. Do we take the fee percentage into account when we calculate the grid step? Yes, that's exactly what we do. We've been always taking into account the fee you pay. So in reality, let's say it's 1.08% as of now, but in reality the gap is a bit bigger because we also need to take the fee into account. But now, since we depict this information on the chart, like no trading exchange fee zone, you know exactly what's the optimal trading range for you, so that you could trade in profit, but not surpassing the profit by paying fees. So that's like just minor infographic update for you. It doesn't change the story and doesn't change the way bots work. It's just that additional information. So yeah, daily average been fixed. Now you can for sure use this metric to this one to compare the results. So the way I do it is this one. So you see I have Algo USDT. I've been trading for like 2 days almost. But before this trade, I had another one. It was also Algo. Let's update it so that it will show the bot history. Yeah, so you see the Algo, and on average it made me 0.24% per day for the last 2 months. I was not satisfied with this result because I knew that the grid step that I configured for this bot was a bad choice, because eventually the volatility we had did not play with the grid step that I selected for this strategy. So that means that I had to change the strategy. So now I have the daily return. Well, I know it's been only 2 days and you cannot really compare the results, but well, for 2 days it's already 0.81%, which is by 4 times more than I had on previous configuration. So I have the same investment allocation, but it's just that now my grid step is 0.79%. And back then I had 25 grids. Here I have 20 grids. So per each grid, now I have more money put into grid. If you divide the whole value by grids, 655 by 20, that's the investment per each grid. Before that, it was the same value. And if you would divide it by 25, you would have a lower investment sum per each grid level. So the way I did is that now I have more money put into each grid, and also my grid step is now lower. So let's see how it's gonna play for me. I expect it to make me at least 0.6% per day for the next month, okay? And I will be satisfied with this result for Algo, okay? Another way you can compare strategies by using the backtest. So let's say as bot, Algo, this sum, 20 grids, backtest. Let's look at it. So for 30 days it would make me 12%. But what if I had only, let's say I had 30 grids, okay? So how would this change the story? You see, it would be only 11%. So that's the way you use the backtest. You can literally take this past data, it simulates the trading and shows you the exact profit that the bot would have accumulated back then. So that way you can compare strategies, okay? Before actually launching the bot, before risking any money. Backtest is like the ultimate solution for you to really stress test the strategy based on past results, like historical prices, and see whether or not this strategy would have played well enough. So that way you can find the optimal one, which would bring you the most. I'm gonna check some comments that you left, so give me some time to read. Even with trailing down enabled, my bots go out of the trading range. Okay, so how much extra quote currency do we need to cover the trading down orders on top of the investment? Well, actually, Here comes the answer from the poll. Yeah. Let's see what else we got. Yeah, so I didn't want to focus like the whole webcast on the trading down, because it's been like a week only since the update, and for that reason I don't have use cases for you yet, because it's been just a week, and the price stayed within the boundaries of my trading range, so there was no room for it to go below it, so I cannot show you some trading down cases as of now. But I think in the next 2 weeks I will get enough of the use cases so that we could discuss all of these cases as of the going out of the range, and what if I enable trailing down at the time when I'm out of the range. And well, let's actually check. I have this one out of the range, 0x Bitcoin. That's the one I had back then. I just wanted to capitalize on the price difference. I wasn't different towards the investment change performance, but I was more into buying 0x as the price falls with Bitcoins, because in a long-term perspective, I believe in 0x. So for me, it's not a speculative trade. For me, it's just the tool to use, like to buy the dip. That's the thing. But anyway, let's check. Trading down, whatever you see. Let's see if it's gonna change the, if it's gonna push my sell orders lower. It's hard to say it now, because kind of we could have spent like hours before it starts moving even lower, so that's something I cannot actually show you now. Okay, but that's something we will discuss next time when I will have more use cases for you guys. Boom. Range. All right, so what else we got? Fee zone covered, minor changes here. Yes, that's not interesting. Whatever. Yes, some API key trade. Yes, that's also fixed. All right, so pretty much these are the biggest updates we had so far. You can once again combine trading up with the trading down, and that way you're gonna always stay in the market. Just to remind you, the SBOT strategy is the ultimate one. Like, it's gonna bring you the most money if you anticipate the price of an asset to move sideways like this. That's when you stick with the SBOT. If you feel like the price is gonna move higher, okay, why I cannot, yes, here we go. If it's gonna move like this, then classic bot with the trailing up enabled, this is like the ultimate one for you. It's gonna bring you the most money. Oh, by the way, I just noticed that on the classic bot we don't have the trailing down. That's interesting. I actually didn't know about this. I think we should have it for the classic bot, but for some reason it's not here. Maybe I skipped this part then when we were releasing the trading down. Maybe I really forgot that it's just for the SBot for this first iteration, and we're gonna add trading down for the classic bot in the nearest future as well. Yeah, maybe that's the case actually. So yeah, you don't have this trading down for the classic bot, but stick with the classic bot if you feel like the price is gonna move higher, and make sure you have the trading up, so that way you're gonna take the most out of the market. We also have the combo bot, but that's for the Binance futures, and you need to really understand the nature of the futures market and the risk that you need to take here into account, and all of that. So that's a different story, and you can watch previous webcasts where we covered this combo bot topic fully. As of today, I just wanted to go through some updates we had, show you the performance of my bots that we've been monitoring for the last 2 months, to show you that the strategy did play well as I wanted it. That's the as-bot strategy that you need to stick with if you feel like the market is gonna move sideways, and especially if you want to capitalize on the market fall. So you see, for Bitcoin it did play well. If you want to learn more about different strategies that you can use on trading bot, you can go here and you see automated strategies part 1, for example, and you got some strategies that you can use based on some patterns that I prefer to use when it comes to the technical analysis, because you can capitalize on this behavior on the market, and by spotting these patterns and applying optimal configurations that you can see here. And actually there is a second part for some strategies, extra strategies, and also some tools for you to use in your technical analysis to really boost your research results. Because the more, there are plenty of tools that you can use. Like, I think on TradingView there are like 2000 or even more, 2000 or something custom indicators and some ordinary traditional indicators, but only few can really tell you this story. So in the blog we have a Bitsgap here, we got some indicators and some professional indicators also covered, like some custom made indicators. But if you learn about them and start experimenting with them, then you will find that they are really useful and you can use them in conjunction with the automated bots. So it's like the god mode for you. Okay, if you want to become OG, then it's not just about bot configuration, but it's also about the market timing, and the way you find this time to enter the market is by using some really in-depth tools like the indicators we have here, and also some on-chain data, like on the Glassnode, for example. That's the website. You can get some on-chain data, like for example the flow of money from whales to exchanges and out of exchanges. Like, basically it shows you the health of the industry and the fear level on the market, and how the activity recovers. So you can sometimes spot interesting patterns before the price goes higher or lower. So that's why it really makes sense to use some tools like the NVT and some other interesting indicators, custom-made indicators, because right now it's only about the custom things. You see, some really valuable indicators that I believe you've never seen before, but you can use it to really broaden your scope of research, and that way improve the quality of your decision making. Okay, so yeah, pretty much that's what I wanted to talk about today. The trading down, as-bot, classic bot use case scenarios, show you the performance of the bot that we launched with you guys together back then 2 months ago, and discuss some additional tools that you can use, like the RVT and NVT ratios, to broaden the scope of your research. So that's pretty much it for today. Let's see if we got some interesting questions. Is there a way to disable pump and dump protection? It won't prevent the price of the coin moving anyway, so why not take advantage of this while it moves? Okay, I understand. So right now we have this pump and dump as a built-in algorithm. It's something that is always on. You cannot switch it off, because that's the solution we came up with after some rigorous testings and everything, and it turned out to be the best solution, overall best solution for the entire community of traders and portfolio managers that we have here at Bitsgap. But I do understand your kind of a concern here that that you want to have this opportunity to switch off this built-in feature that we have. I cannot actually answer to this question because it's always about kind of a combined overall decision that we need to make at Bitsgap to discuss all pros and cons, and the same way we did with the trading down before. Like a month ago, you've been all asking for the trailing down, and that's why we approached the whole team and had this discussion, and then decided that yes, we should have the trailing down because this and that and blah 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 blah. Overall, good decision. The same way we might consider adding this feature when you can switch on or switch off the pump and dump protection at your will. But I'm not I cannot guarantee you this. I'm just telling you that I hear you. I understand what you want. We will discuss it, but I do not guarantee that we will implement it. Okay, so that's my answer. What else we got? How many customers you have today in Bitsgap? Well, are you the competitor, Peter? Are you from some direct competitors that we have on the market? You want to get this internal undisclosed data for some reason? You really think I will answer to this? Well, unfortunately, I cannot tell you. But pretty much you can actually go to Binance, and on Binance we always take part in the competitions, like in trading competitions that they arrange for the whole community. And you can see that every time there are like more than, I think the last time it was like 4,000 traders overall registered for the competition, and that's just like a portion of the customers that we had. Because if you can direct that many people to trading competition, well, that tells something. So like that's kind of a tip for you to really kind of guess what is the activity at Bitsgap and how many traders there are on Bitsgap. It's just go on Binance and check previous competitions that they held. I mean tournaments, trading tournaments, and check how many people registered through Bitsgap and some other competitors, and you can compare. That's kind of the way I can answer to this. Will you have neutrals bot coming soon for futures? Honestly, I don't know, because I think that's something we discussed, but not sure about the implementation and the, well, deadline for sure. No deadline, but I will take a look. I don't know actually. How do you get notifications on your live support chat? I've never seen any after a few requests for help. Well, it's just that there are so many requests sometimes that it takes a day, sometimes even two, I guess, to give you an answer. And also it depends on the complexity of the answer. If you send like a 2-page report, then for sure it's gonna take some time, because it might require some help from the internal team to answer on some questions you might have. So that's why take into account the complexity of the questions that you ask, and you're like not the only one asking some really witty and interesting questions. So that's why usually it takes time to answer on it. But we make sure that the response rate stays high enough, like at least 80%, so that we can cover all the questions you have, guys. Yeah. Is reinvest possible for long-running bots? That's a great question, Asben. I'm not sure if I pronounced your name correctly. Sorry for that. But anyway, yeah, that's actually the feature that we are working on. Yeah, that's something I can tell you, because it's an interesting one. This can really boost results. There are some pros and cons of this reinvesting algorithm that we want to implement. So that's why it would require several iterations before we can release the solution. And maybe we will have a focus group to stress test some strategies based on reinvesting. So stay tuned, and we'll see if this is something to be announced soon or not. But yeah, the reinvestment thing is an interesting part. Like even for me, it's really interesting. So that's something that I would want to see on Bitsgap. Okay, like for example, I made $206 on BTC strategy, and let's say I could have this option where I could select, let's say, 30% of my return I want to reinvest. So that's something that would be great to see on Bitsgap. I agree with you. That's something that I would want. So most likely that's something you will see pretty soon. Why do you release a bot without 100% working? Well, you need to elaborate on this question, because what do you mean by 100% not working? Like, they execute orders, they execute stop loss, take profit, they execute all of the parameters that you set. So I'm not sure what do you mean by not 100% working. Like, have you encountered any problems? If yes, then just report on these problems. Speak up, make sure that you approach the support on the main page here, and we will check all of the bugs that you might have encountered. Not working for me. Well again, like, what exactly is not working for you? Just tell more and we will help you with this. Yeah, so I think we covered most of the things that I wanted to discuss today and answer to some of your questions. So if you have some more questions left, and if you will come up with some interesting questions after, then just leave them in the comment section below this video that we will post on YouTube. You can always approach the support on the main page, of course, and that way you can forward your question even to me. Yeah, so some people manage to do this. Like we had a guy, I've actually forgot his name, but he made this 10-minute video on the trailing down feature before we implemented it, and sent it to us, and we actually watched this video and got some takes from it and actually implemented the trailing down. So if you have this level of dedication and patience, then yeah, well, if you want something to be implemented on Bitsgap, and you can and you can provide reasoning for that, like rational reasoning for this feature to be implemented, then most likely you will see this feature. So the more I mean, it's not just about saying that I want this reinvest feature, okay? Well, we hear you, but if you, let's say, can send some more in-depth solution that you would possibly see on Bitsgap, then it would boost decision making, like the way we did it with the trading down feature. Like we got so many requests for the trading down, and some were really in-depth requests with perfect reasoning and everything. So that's why we really push this forward. So that's the way you can do it with some other features that you want to see on Bitsgap. So it's all about the community. Like we are really community oriented, and that means if you can speak up and be reasonable, and that way you can really get some features you wanted to see. So yeah, that's it for today. I really appreciate you all coming, and thanks a lot. Hope to see you next time. And by the next time, I will have more use cases with the trading down, because it's been just 1 week, and still not enough time for me to get some use cases. So I hope in the next 2 weeks I will get more use cases to show you, and then we will cover more questions with regards to the trading down. So once again, thanks a lot, I appreciate, and hope to see you next time.